can even count that completely. But
I practiced down there for a little bit, for about a year, but plaintiff's law wasn't my love.
Gotcha.
It's always been insurance. I just always came back to insurance.
Absolutely. Well, as people are joining us here, we are waiting on one more. So hang in with us. We'll be starting in just a few minutes talking about the amount of equity in our home. We'll touch briefly on the Fed interest rate hike on Wednesday. And then we're going to talk about insurance and how all of the equity in the last 2.5 years has changed your insurance needs. So make sure to stick with us or come back for the replay. But we wait for Johnny. Yeah, I grew up in Washington State.
Okay.
So I went to college out there.
Which college was out there?
Western Washington University. Okay. So way up almost like to the Canadian border, which was awesome because their drinking age is like 18. So
you're living.
They catered to us heavily. We were like literally maybe 20 minutes to the border.
Just hop right across the border and get yourself a beer.
Yeah, exactly. We didn't have a Greek system or anything. So if people wanted to have, extra fun, they would go up to Canada and partake in all that Canada has to. Plus, back then, the exchange rate was so different.
Oh, yeah.
We would go shopping up there because it was duty free and it was super cheap.
Yeah, you were living the dream.
I know. It's crazy. Yeah. I know. As a college kid, I'm like, man, I didn't realize how good I had it back then.
Man, when I started college, I was 17 when I went. I wasn't even allowed to use our gym on campus.
Oh, my gosh.
You had to be 18. So they wouldn't even let me on the facilities on campus.
That's crazy.
Yeah. So we had wildly different experiences.
I know. Oh, here's Johnny. I'm going to add him in. Hey, Johnny. Good to see you.
Good morning. How are you guys?
We are live. We were just jamming about reminiscing on college days back in the day.
Yeah.
How are you doing this morning?
Good. It's Friday.
That's right.
Not that really matters to us, but it's Friday.
I know. I know. I love this cool weather this morning, though. I sent the kids in jackets. I'm embracing sweater weather today.
I opened my front door a few minutes ago, and I just stepped out real quick, and I kind of was like, "Oh, wasn't ready for that."
It was my daughter came back twice from the bus stop to get more jackets and she was freezing this morning.
Yeah, I heard it got down in the 40s overnight.
Yeah.
Wow. Which just sounds crazy, but
yes, we're just battling 90-degree weather.
Yeah.
I know. So we're promptly at 9:30, guys. I figured we'd give it a couple more minutes and let a couple of people jump in. And we are live on Facebook, YouTube, and LinkedIn. So
I appreciate you setting all that up.
Yeah.
I would never figure that out.
Yeah. No, StreamYard makes it super easy. So honestly, I'm not sure I could get it wrong, but if I can crack the code to get it on Instagram too, we will be hot next time. So
yeah. I wonder if that's on purpose though. They want to just be their own standalone thing, so you have to watch on Instagram.
Oh yeah. I mean, I hope because Facebook, obviously Meta owns both, so hopefully they'll make it easier. But there is a third-party hack you can use. I have two-factor authentication set up on Instagram, which I think is screwing it up. So, but if I turn that off, then I can't run my ads. So it's this whole marketing conundrum that goes on. So
yeah.
But well, Johnny, I was telling Corbin I'm gonna try and keep us on track for time today because I have terrible tech juju. So it's actually a miracle this is working for me. My phone shit the bed last week, and then my Jeep started throwing all kinds of errors and stuff. So I took it in yesterday thinking it was one thing. And they're like, "Oh, you have 9 codes that are all flipped and need basically your whole interior electrical system it's not even a year old." What? And I was like, all right, cool. They're like, "So you're not getting this back today." I'm like, all right, great.
Once it goes
to a loaner?
No, because when I dropped it off, it was 3:45 and they weren't prepared to give me a loaner because they had told me, "Yeah, sit and wait. You're good. You'll be good." And I'm like, okay. So I had to jump hoops. So they're picking me up on a shuttle to get back. Then I got to get back here for another Zoom meeting. So I'm like, oh my goodness. But
you got to zip down Virginia Beach. You could be all over the road.
I know. Life of a realtor, right? Just beating the roads all the heck. So, you guys want to dive in, get ready and get going here?
Let's get rock and roll.
Okay, awesome. So I'll kick us off and then punt it over to you guys. So the biggest thing that, obviously in the last 2.5 years, homeowners have seen about 8 years worth of equity in just 2 years. In our area, a more typical annual pace is like 3.5% equity growth every year. And we were seeing, upwards of 20%. And so if folks didn't sell right now, they're sitting on, I've had clients sitting on $150,000 in equity that they might not know exists there, but if they didn't sell and cash out, they have this equity that's built up. And so I'm so excited we get to connect this today to figure out, okay, well, I bought a house for 400,000. Now it's worth 550, 575. How does that affect my insurance needs? But also, how can I get that equity out and use it? So, another conversation for another day is pulling that equity out. Of course, talking to me, buying more real estate, which still affects insurance needs. But, utilizing that equity while it's still there, because we are going to see that equity change a little bit as prices normalize, not crash. But again, conversation for a different day. Yeah. But I did want to briefly touch on that on Wednesday. Of course, we did see that Fed interest rate hike. You guys, I don't know if does that speak to your markets at all? Does it affect you guys in any way?
Maybe more Johnny than me. I mean, for insurance, so for property and casualty insurance, it more affects the hardness of the rates. So as the interest rates increase, so will rates. So we'll trail probably 2 or 3 months, but then our premiums will start to see a spike.
So
not a huge spike,
okay.
But a small percentage increase.
Yeah. For us, I would say, in more of the financial planning world, it kind of maybe affects how people decide they want to invest their money.
Okay.
And instead of investing in, a real estate purchase or what have you, they're thinking, well, maybe my money would be better invested over here in a different avenue.
Okay. Great. Awesome. I can't wait to dive into that a little bit deeper as we switch around. But, I think the biggest thing right now that I'm trying to chat with people about is contact me for an equity review. Like, that's part of my job. I'm not just here to buy and sell real estate. So if you guys are listening, tuning in to us and you're like, gosh, I know that my house has increased a lot. We don't have plans to move necessarily. That's totally fine. Reach out to me. I can run comps, do a full equity analysis, and then you can take that over to Corbin and Johnny here and talk about, like, how does that affect my insurance needs? How does that affect my life insurance needs? How does that affect everything? So we're going to be getting into that deeper. But if you have questions for me specific in real estate on what is my equity? How do I get it out without selling my home? Those are questions. You can see my phone number down below. Feel free to text me, drop a comment in the feed here too. We'll be monitoring that also. So if you guys have comments you want us to address, like live here, we're happy to do that for you also. But let's kick it over to Corbin first. Like, Corbin, obviously, like, clients, like I said, have had, like, they bought at 400. When they bought insurance for their home and things at that rebuild price. And now we're at, maybe 500, maybe 600. What's the most important thing that people need to be doing now?
Well, the very most important thing that you need to do is you need to talk to your insurance broker. We would be happy to help you if you have any questions about the effects. But the main issue is most folks are underinsured now because most carriers, not all carriers, but most carriers do not raise your dwelling coverage, which is listed as coverage A on your policy. And that coverage, what it is, it's the coverage to rebuild your home back to what it was before, any kind of loss occurred. So if you are underinsured and you suffer a total loss of your home, what's going to happen is you're going to have a gap shortage. So they'll pay the 400 because that's maybe the dwelling limit you had. But if the cost to build your home is 500, because the cost of materials have increased, the values of your homes have increased, then that gap is going to be your responsibility. So then in the worst day of your life, when you've got to rebuild your home, you've also got to come up with $100,000 or whatever the number is to fill that gap. And that would be the absolute worst feeling. So what we need to do for everybody is we need to reassess your dwelling coverages to make sure that you're properly insured. So that way we can, with that huge equity gain that you got, that we can also bring your insurance up to make sure that you're protected so you don't lose any of that. So that is the main thing that we need to. And the other item I'd like to mention is with your cost of everything increasing, everything, with inflation, everything, the numbers are going up. One thing that we can do as an independent insurance broker for you is I can shop the market for you. So I can help you alleviate some of your stress with other avenues increasing and hopefully bring your insurance back down to offset those costs. So please reach out if you have questions, text me, call me at the number below, email me. We'd love to help you and speak with you and see what we can do to make sure you're protected.
Yeah, that's huge. I know that's a conversation that I just after our conversation over coffee the other week, just starting to have with clients. And even for myself, like that never crossed my mind because we're also focused in different areas right now. Everything's, shifting so much. So I think that's a huge, making sure you have that proper coverage. If you bought a year ago, 2 years ago, like that has changed.
It will be.
Yeah.
And some carriers will put in like a small increase automatically. And I've had clients say, oh no, they put it, but that's likely not enough because usually they'll put the 3 or 4% typical rate, adjustment with, but not 8%. They're not increasing it to where COVID took the numbers. So even if they do slight increases, make sure you double check that they increased it enough to cover the value of that home.
That's huge, especially as we're going into fall season and storms and things like that, making sure you have coverage because I think, we saw more snow in January than we've seen in the past and people had issues there. And part of that coverage review could also be talking with you or talking with whomever about coverage for water intrusion and things like that.
Yes. Water damages are the most confusing area of insurance because it's depending on how the water happened or how the water damage occurs is whether it's covered or not. I mean, I won't go into this super in depth. This is probably for another video, but
definitely
call me and we should definitely. I have a video on my Facebook about the differences in water coverages. Go back and check it out. Like I said, I won't go through it in here, but or call me because it is so nuanced and there's certain coverage endorsements we can add to your policy, especially if you have basements. We need to make sure that there's certain water backup coverages on there so you're protected because otherwise your basement may flood and you may have no coverage. I mean, I don't want any of my clients to be in that situation.
Yeah.
See?
Yeah.
That happened to me.
Yep. And I don't want that for my clients.
I know. It's super stressful. I'm the same way, Johnny, same as you. I had investment property that flooded and that's not fun either.
No.
Yeah. And I was on the phone with my homeowner's insurance because I was very confused but it's water. And they're like, yes, but, and so I didn't realize I was pretty much very vulnerable.
Yes.
And my wife and I came out of pocket for repairs that needed to be done for my basement to prevent it from happening again.
Yep, exactly. And that's why the right insurance is absolutely necessary.
Yeah. And I think just to kind of wrap up, like in the rebuild, we still have builders who can't get siding, who can't get a fridge, who can't get like basic things. So, the rebuild cost has increased even at a higher level than maybe, a resale cost because just getting the materials is so incredibly difficult. Still, we are still seeing shortages and, so important to have that coverage, especially because we never expect our house to burn down or flood or any of those things to happen. But, I think the other big thing and, kicking it over to Johnny is that like, we never expect a death to occur, right? Like that's not something we plan on, but, I know that, equity and making sure a spouse or significant other or another homeowner is covered is a big part of life insurance too. Tell us about that, Johnny?
Yeah. So, with MassMutual, what we do is we kind of look at 3 areas, life insurance being the big, probably our bread and butter. But we also help people where equity is concerned with if they want to do something different with their equity for investing and also for planning for later. But definitely where life insurance is concerned, a lot of times people will ask, well, when's the best time to talk to a planner, financial planner, advisor, what have you? And the best time is anytime. Or the time when you think to yourself, I don't need to talk to them. That's how you know you do. Because with the analogy of house damage, you wouldn't fix your leaky roof during the storm, right? You make sure the roof is taken care of so then when the storm comes, you guys aren't getting wet. So oftentimes when you purchase a home, I think for any of us, it's probably the biggest investment we can make and we probably will make.
Yeah.
And it's a good time to step back and look at what you have, because a lot of people say, myself, I'll use myself as an example. My wife and I purchased our home together, and we do rely on one another to pay the month-to-month mortgage as well as utilities
Right.
and everything. And I know we're not unusual that way.
Hmm.
Um, so if something happens and I'm gone tomorrow, where does that leave my wife? Um, so we took a moment and stepped back and said, okay, let's just think about just the house. And even though I had other life insurance, and a lot of people might have life insurance to their jobs, they oftentimes, when you ask them, well, what would you want your life insurance to do? They say things like, well, I want it to take care of people. But what does that really mean? A lot of times what we think is we want it to send our kids to college. We want it to just help someone pay the bills, but we don't really kind of break it down. So what I did, what my wife did, and what I've done for a lot of my clients is literally looked at the mortgage itself and said, okay,
Hmm.
for example, if you purchase a home today, and let's just say you paid $300,000 for it, you could look at, your 30-year mortgage is pretty common. Well,
Hmm.
term life insurance, which is a period, not forever, you get a 30-year term life insurance policy for the same amount. Which term life insurance is great for that kind of a purpose, because for one thing, it's more affordable than whole life if you're on a budget crunch, which a lot of people are right now. But it also, if later you decide you want to change it and actually just make it whole life, meaning for the rest of your life, you can do that too. So there's flexibility in it. But one thing to remember, if you or your partner pass away, when you speak to the mortgage company, they're not going to be ask you, can you pay off the house?
Right.
They're going to say, can you keep paying month to month?
Yep.
And the other great thing is, if you've been paying your mortgage, the balance is lower. So you still have a $300,000 insurance policy, but now maybe you only owe 200,000 on the house.
Right.
So what that insurance does for you is it gives you time,
Okay.
because many people may not know what they're going to do. They may say, am I going to stay here? Am I going to leave? They still have to go about their day-to-day business while dealing with the loss of someone important in their life. On top of, I still have to pay my bills because unfortunately, the mortgage company and Verizon and Comcast and all them aren't necessarily going to be super sympathetic when they don't get paid. So it gives
Absolutely.
people time. And that way, you can sit there and pay the month to month mortgage and also have the freedom to also decide what your next move's going to be. And, odds are a lot of people, when I talk to them, say, if my spouse passed or my partner passed away, I don't think I'd stay in this house.
Right.
It would be nice to have this time to figure out what I'm going to do. And then oftentimes they still have money left over that they can use to finance their next home, whether it be another house, condo, whatever the case may be. So
Right.
always a great thing to look at if you own a home, and especially if you have to consider the scenario of, if one of us doesn't come home tomorrow, where does that leave the other one, at least for the mortgage? And of course, you could have other bills that you're connected to. So there's a lot to look at. But when we're speaking just to mortgages, I think that's the biggest one I speak to people about. And I especially, anytime I come across someone who's just bought a home, I kind of say, we should probably just chat, just
Yeah.
because, there's a lot. And I know buying a home, it's overwhelming. It can be if you've never done it before. There's a
Hmm.
lot. So sometimes when people hear me say, hey man, I've signed my name 100 times, but just trust me, it only takes a few minutes for me to sit down with someone, kind of explain some things, show them things, and then we figure it out from there.
Yeah, I think that's so important because so many people don't think about life insurance covering a mortgage for whoever is remaining on that mortgage,
Yeah.
or the family who's going to be taking over. Maybe it's just you on the mortgage. That's great, but somebody is going to have to deal with the house if and when you pass. And I know you'd also deal, Johnny, in the not just term but whole life.
Mhm.
And I know it's a discussion for another day, but taking the equity and even overfunding a life insurance
Yeah.
policy, right, to pay for college. And what other kinds of things, if someone were to take their equity and overfund a whole life insurance for themselves or kids, things like that, when they overfund, what other things can they pay for with that delta?
Well, so with whole life insurance, what a lot of people don't realize, and what I didn't realize until I got into the industry, is that it's more than just somebody passes away, someone else gets paid.
Right.
Um, what it also does is it works as an investment tool and it accrues cash value over the years. And depending on, how much you're paying month to month in the premium and how long you pay, that cash value can become very significant. It's actually very common. A lot of my clients have policies on their children my youngest client is not even a year old yet. Because what they're doing is they're putting money into it, and they're doing two things. Their end game, because with children, we're not getting life insurance on a child because you plan for a child to pass away. You're getting life insurance on a child because they're going to live, and that one day they're going to have to deal with the same things that we're dealing with today, as far as if they have a family, if they have a home, if they have assets. So this saves them work in advance, because imagine if when that child is 15 years old, develops some kind of health condition, it might make life insurance paying for them when they're, an adult. It might make it more expensive. But the other thing is, to your question, when you're putting that money in, and say, for example, if you do it for yourself, you do it for a child, and then you're month to month paying the premium, and say about 15, 20 years goes by. And again, depending on how much you put in, I've seen some where they're sitting on almost six figures.
So
and
college.
Yeah, exactly. And that money is theirs to take when they want it. And unlike other kind of investment plans, it's very pretty much you call the shots. You dictate how much goes in. When you need the money, you say, hey, I want to take my cash value. And we don't ask you what you're doing with it. It might be college. That's a big one, especially because now and in years to come, sending one child to college will cost you almost $250,000.
Yeah, much as my house.
Yeah, exactly. And imagine if you have more than one child. My next door neighbors just had twins.
Yeah.
So if both those little girls go to college, they're looking at probably spending $500,000 or having that much in loans. So the cash value that you can take, you can put it toward that. But also say it's for a different purpose. Say it's for you as an adult, and you're thinking, I'm 25 years old, I'm going to do this, and in 20 years, I'm going to pull this money out and I'll use it to, maybe I'll pay down some of my own debt. Maybe I'll reinvest it elsewhere. Maybe I'll, it's your money to do with as you please. And that's kind of the beauty of it. And it's tax deferred. So you don't have to worry about the IRS getting their hands on the money, So you have options there to do pretty much whatever you want. Some people have used that money. My favorite fun fact about cash value, that is how Walt Disney World was started. Walt Disney, you had a life insurance policy. He used the cash value to get it off the ground.
That's incredible.
Yeah, cool.
So I hope that's sending a lot of people spinning right now. Like,
what spinning me right now.
Yeah, I know. Right? I know. All
right.
That's the one I remember, but there's a couple other ones. But Disney's always the one, because think about what Disney is. Disney owns everything. Disney probably owns my house, for all I know.
They're tied to mortgage somehow.
As far as opening the park, it started with them taking money from their life insurance cash value and applying that. And the great thing is, when you take the cash value from your life insurance policy, you still have a life insurance policy. It doesn't make that go away. Right. So you also still have that base covered, which is great.
That's awesome. That's awesome.
That's really good information.
Well, I know we're kind of, running on to our time window. I appreciate you guys so much. And for people hopping on at the end here, I think it's so important. Please go back and watch from the beginning because this is hugely important. You have major things. We should all be so introspective on this right now because, pandemic hit practically out of nowhere. Were any of us prepared for that? Absolutely not. No way. And especially in markets like real estate, we were so blessed in Virginia that we didn't get shut down, but a lot of states did. Yeah. Realtors could not function like they had been. And so if you have an overfunded life insurance policy, maybe it's just such a great tool to have in your arsenal of an overall financial plan. So like Johnny, who was just speaking, make sure to reach out to him, but also with Corbin, there's so many things I think that go into protecting the investment that you've just made, making sure that, this winter you're doing something, it burns down because you have a space heater running or you left a toaster plugged in.
Make sure you clean your chimneys.
Yeah, I know. Yes, chimneys. I know a family who the bathroom fan that just runs, they were using it as a sound machine at night and it caught fire in the attic. Just you never know. So this is such an important topic of conversation to be having regularly. For each of you or both of you, what do you recommend? How often should people be reviewing each of these pieces within their lives?
I mean, for the property and casualty world, for your home owner's insurance and auto, I mean, annual checkup. So every time you get that renewal, just take a quick look at that dwelling coverage limit and just make sure that it looks similar. And then just if you have a broker, if you know, if I'm lucky enough to be, you can call me. We can walk through it. I can rerun it and just make sure. It's no cost to it. It's free. We can just check to make sure that you are protected.
Okay. And then Johnny, I know you said there's no wrong time, but how often, I
Yeah.
feel like a lot of people are like, oh, I set this up, you know, years ago and it just does its thing. Like how often should people be reviewing their financial plan?
I would say kind of the same as to what Corbin spoke to, probably annually at least. I make it a point that I try to keep in contact with my clients once we've gotten something going, because I'll often find that maybe we took care of mom and dad and they've got policies now to make sure to cover the mortgage. But then I check in maybe 6 months later, say, hey, how are things? Anything else on your mind? And more often than not, I say, you know, actually, yeah, I was thinking about this. And we have another conversation about whether it's more life insurance, or maybe now they're interested in talking to me about their retirement, which might be another avenue for them to invest equity from a home, you know, for retirement, especially the market being what it is right now. You know, we have other options that are safe and more kind of protected from the volatility. Yeah. But at least annually, and honestly, the other thing I would say probably is maybe anytime you have a milestone in your life, like buying a home, having a child, getting married, switching jobs, getting divorced, you know, any milestones definitely are a good time to reevaluate that. Otherwise, annually or whenever it just strikes you, hey, I wonder if I should talk to somebody.
Yeah. Yeah. If that shower thought comes to you, like probably should pay attention to that. So,
there's a reason you're thinking about it.
Well, I so appreciate you guys. I'm looking forward to future calls like this too. Please, to everyone out there, making sure that you're following all of our social media so that you are actually, if you guys want to drop in the comments below on Facebook and things, you know, I've tagged you both, but however you prefer them to connect with you, also, you know, LinkedIn, things like that. Make sure you drop those. People see everything. But you know, chat with me, find out what equity you have, how you can pull it out, how you can reinvest it. Talk with these guys. And I'm still looking forward to talking to you more, because we'll have to definitely, Corbin, go into more on like the water element. And Johnny, I know there's so many things that we can go like deeper in on your side too. So stay in touch with us, guys. And we'll be bringing you lots of good insurance and real estate information in the coming months also. So thanks, guys.
Thank you. Appreciate it.
Bye.